Good morning, traders. Welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado, and it's a pleasure to start this week with some of our wave counts, some of our trading plans. Today, we're going to cover the Euro and the S&P. All right, traders. So, Elliott Wave is a fantastic tool to understand price action, to understand what happened before, and then we can create some scenarios with what is likely to happen next. Everything needs to be validated and everything needs to be confirmed before we jump into the trade. A common mistake applying the Elliott wave theory is not looking or not waiting for the proper validation, or in some cases not understanding what a validation means or a validation is. So a common mistake, let's say that I have here a wave 1 and a wave 2. So a common mistake is to start selling because we are in the wave 2. So you ask the trader, okay, so I see you short here this instrument. It could be a stock, it could be a currency, anything. And the answer will be, oh, because it's the wave 2 and the price, it was testing a Fibonacci level, the 61.8 or the 78.6, whatever, and that's why I sell it. Okay, but that's a big problem, right? Because you are not reading supply and demand. So Elliott wave could be your best friend, Elliott wave can be your favorite tool, or could become your worst enemy. And for most traders that don't understand properly how to use it, it can become their worst enemy and can make them lose a lot of money. So I discovered that I have been working with the Elliott wave theory since 2008, when I started learning the theory, and then around the 2010, I started teaching and I started sharing different ways for applying the theory. And after these over 15 years that I have been working with the theory every day, I can tell that works, and that is something that really provides an edge and really provides value understanding market cycles, because that's what we are doing with the Elliott wave theory. But also we need to understand that we need to read what is going on. For example, this is a great example on the euro. I'm looking for a wave 1 and a wave 2. So here the price today is started to accelerate to the upside. This is not good. This is not good at all when I'm in a wave 2, because this is telling that supply is not around. So if I sell here, let's say that I start selling here, that's a crazy trade, because I'll be alone. Nobody else is selling. So why should I be trying to sell? It doesn't have any sense. When the price accelerates at the end of the corrective wave, we need to get ready for a hard high. And here is where the beauty comes, because the beginner will be trying to sell, leaving a protective stop loss here. That's the logic, right? So I sell anywhere here, and I leave a stop loss here, right? And of course, with different techniques, probably the output is going to be the same, right? Traders trading moving average crossover systems. Here the price hits a moving average, or the concept of the engulfing pattern, whatever, right? But something that they have in common, no matter the strategy that they are using, is that here there are plenty of stop loss, right? So don't forget that when the price hits the stop loss, that money is going into the big guy pocket, the market maker. Probably other trader, but most of the times, or 90% of the times, the losses of retail traders, small institutions, are going to the big guy, to the market dealer, to the market maker. So if you have a business where you know that here is where you can make money, what is going to be your attempt? Well, you're going to try to push the price here higher, either buying or not selling, because the price can move up because the big guy is not selling, right? So without any significant effort, they can lift the liquidity, right? They can withdraw the liquidity and the price can move in one direction and take out all the orders that are here. And when the prices start hitting, that seems that in a couple of seconds is going to start absorbing these orders. Right here is where they are going to make their money, right? So as Elliott wave traders, we are not doing anything here. We're just watching. So look, this is going to be simple. Let's suppose the price hits this area. Well, I think it's already above, right? So let me draw here the level. So what we can do here, what we can do here is we can extend the wave 2 to the right, without any loss or without any bad setup, because we couldn't sell with this momentum. But look, the trade, if it happens as I'm expecting, is going to be like this. Price comes above this area. Makes sense, right? Because there is where the stops are placed. And after cleaning and clearing up the area, let's say that then we have a nice red candle on the hourly chart showing up like this. That could become extremely frustrating for traders trying to go long, because they will say, oh, we got a break up of the resistance, so at the retrace I'm going long. And that's the opposite trade, because actually we need to sell here, because there are different factors that are telling that if this area is absorbed, we are going back at least to this area here, to the 106.20. And if it breaks down, after that, we're likely to take out this low. And here, if it accelerates, the euro can drop a lot. But if the price comes down here and rejects, that's it. We need to close the trade, because maybe we'll jump back again, or we will see what will be the next step, right? It's too early to start planning that part, but we know if it rejects that we should close the sell trade. So right here on this area is where I'm looking to see if the euro is going to validate the sell trade. Of course, if we keep seeing green candles, if we keep seeing here green candles, of course, we're not going to sell it, because we need to see supply entering the market here. And that's what it makes sense. We need supply, and we will understand that there we have all these weak buyers. If that's the case, and where is there a stop? Well, easy, right? The stop for the buyers is here. Some of them will have the stop here, right? So the thing is that when we start using the Elliott wave theory properly, we start seeing liquidity areas, which means that those are areas where the money is, where the stops are, where the market orders will be, where the limit orders are, right? That's the liquidity area. And money likes liquidity, and it's like a magnet. So that's why we can see why here the price is accelerating into this area. And that's the setup. What if something different happened during the session? Let's suppose that today the price came up here with a lower pace, with a lower slope, probably with a lower size of the candles, right? And at this area we got the rejection. Well, that will be the sell trade, because that will confirm that the market was likely to fail to make a hard high. But with these green candles getting bigger and bigger, there is no way of trying to sell. You see the difference of waiting for a setup, understanding supply and demand, rather than selling because it's a wave 2. So this is a great example, because this is a problem that traders are facing all the time, using Elliott wave or using any technique, right? Any technique is the same thing. Is that a retrace? Is not a retrace, right? That's the thing that we're trying to solve as traders all the time. If the price is going to continue, if the price is going to reverse, that's the type of question that we're having all the time. But I found that most traders are doing things in the opposite way. Imagine, for example, buying here. That would be a huge mistake. Imagine buying here because the price breaks up. Yeah, probably you can have a couple of home runs because it was starting and the price moves up and keeps trending higher, whatever, right? Sometimes it's going to happen. But as traders, we need to have a low risk and we need to have a setup that it doesn't need to work all the times. Actually, that's not necessary, of course. Imagine a strategy that works all the time. Of course, it doesn't exist. But we need a good setup that we can repeat, that we can have an objective approach, and that we can make money at the end, right? So that's the real deal when we apply any technique. And I believe that Elliott wave is a fantastic technique in order to do that. Let's have a look at the S&P. The S&P on a daily chart is building the corrective wave. I believe is corrective. We are going to talk about if it's corrective or not in a second. But look at this wave 2 here, for example. Price moves down, makes the 2 and accelerates, right? Here, price moves down, makes the 2 and accelerates, right? And we have price moving down, making the 2, and I think we are going back to this area on the S&P. This is a daily chart. So now when we go to lower time frames, the markets are fractal. That means that we have waves inside waves. So if on the daily chart, I'm looking for the end or the completion of 2 green, then we can have, after that, the sell-off, right? And if we have that sell-off, we can just anticipate the timing by moving to lower time frames, because a daily signal is gonna be too late, right? So we can accelerate that entry on lower time frames. Let's move into the hourly chart. As you can see on the hourly chart, what we have in front is just the first leg. This is what I'm calling here wave A. That's the whole thing, right? That's what we have here. And that means that if we get to the top of A and we start seeing the sell-off for B, right? And then we have the leg up for C, here is the sell trade, right? That's it. In the meantime, we can follow the trend. We can look for the B, go long after the B, trying to follow the trend when the trend is strong, when we have fast candles, and when it starts weakening, it's where we can trade. Let me show you an example on a 5-minute chart. For example, today, let's have a look at this distance between the 3 and the 4. And there is something else here. Some traders believe that they need to come to the 5-minute chart and add labels on the 5-minute chart. I believe that's a waste of time, because if you have from a higher time frame that this is a wave 3 and this is a wave 4, why you are going to spend all the time labeling this instead of using that energy to plan the trade? Some traders come to the 1-minute chart to try to label the waves, and well, they do that, they miss the entry. So my point is that on lower time frames, we need to know on which wave we are. In this case is wave 4, and we need to start finding its end. That's it. So let's make a couple of exercises finding the end of 4. Look at this one here. The price rejects. That could be an entry, a scalp entry, right? Another one here, and another one here, and another one here, right? Of course, with experience, you can start filtering out those setups that are too early or that are not ideal, right? I'm getting ready a course for my members that we are going to work with supply and demand zones. That's going to be at the end of March. We're going to have roughly 4 or 5 lessons, and we're going to introduce the concept of Elliott wave blocks. It's a technique of supply and demand that I'm working on in terms of working on the course to spot specific levels. So it's not going to be Fibonacci related, it's going to be price action related. So clearly in this area we didn't have liquidity. And when the price is sideways, we have liquidity. And here we have the Elliott wave block. And on both cases, it was a key area. So look at that beautiful entry. Sometimes we need to try 1, 2, 3 times. Finally, the price starts developing, and here we can book our profits. Or if we are greedy, we can book partial profits, and we can try to get more, right? Of course, everything is possible. But the main thing here is understanding that, and also look that this leg down is slow. This one is fast. This one was fast, slow, fast. So slow price is corrective. Slow compared to what? Well, to the previous cycle. Fast is slow. Slow is corrective. It's likely to be corrective, right? Fast is impulsive. And fighting or trying to find the end of those legs is more complex than just following the trend. All right, traders. So that is the analysis for this week. It seems that it's going to be an interesting week in the markets. We have a fantastic membership in ElliottWaveStreet.com. So you can join us. You can join our system here, our membership, and you will get updated wave counts every day. You will get the daily videos with the explanation of the setups and more. So sign up here on ElliottWaveStreet.com/membership, and you will get immediate access to the education. We have some good courses inside, to the live market analysis and all the things that we have here on the website. And if you have any questions, please contact us at support@ElliottWaveStreet.com. So please have a fantastic start of your week. Make some good money, and I'll see you soon. Take care. Bye-bye.